What's up, guys? It's Rob here, and today I wanted to talk about something that just happened, which is unfortunately dragging the stock market and a lot of stocks down. We got some somewhat negative news coming out from the Fed, and we're going to be talking about that and the effect it's having, as well as what's going on with some individual stocks. But first, I'll show you guys that the Fed minutes that just came out showed more rate hikes were in the pipeline. And this is really scaring a lot of investors. Now, when the inflation numbers came out for the month of July, and they were actually 0% for the month of July, they were still pretty high year over year. But for the month of July, they were 0%. That led a lot of investors to believe that potentially the Fed would be a little bit more lenient with these rate hikes, while the pace of these rate hikes is potentially slowing. The Fed is saying that there's still a lot more in the pipeline, that they still are planning to continue raising rates to combat inflation aggressively, and that is unfortunately scaring a lot of investors. You can see the Dow is down 1%, the S&P down 1.5%, the Nasdaq and Russell 2K both down about 2%. All of the major indexes are down. The VIX, or the market risk, is up actually. A lot of people are getting very fearful. They're seeing that stocks are dropping. The S&P just plummeting ever since this news came out. Bed Bath & Beyond down 44% when this came out. MindMed down about 12%, and Sundial is even down about 1%. So a lot of stocks, unfortunately, plummeting on this news. Now, keep in mind, guys, while the Fed isn't necessarily not going to be raising rates, inflation has been at least lower in July than it has been previously. A lot of that due to energy. Over the long-term future, I expect that we will eventually be able to drag inflation down and start keeping it down towards more tenable 2 to 3% over the long term. Obviously, we're going to have to battle with it, but the Fed raising rates is nothing that I wouldn't have expected to happen. I didn't expect them to stop completely. While the pace of those rate hikes could be slowing, that is a good thing. That's the all that I really would have expected to happen from the inflation numbers actually being lower than where they were previously, right? Maybe we get some slowdowns in the rate hikes. This isn't too out of line with my expectations. And overall, if you look at the stock market, a lot of stocks have still been sold off in a pretty dramatic way. We're nowhere near where we were at the beginning of the year before these rate hikes started coming into place. We're still pretty darn low. And, another little pullback could, in my opinion, just be a better buying opportunity. I'd rather just be buying during a pullback than continue to buy as it moves up, right? I'd not mind too much seeing it fall a little bit and have the opportunity to get some more stocks for a fairly cheap price, considering the long-term potential that a lot of stocks have, right? If you're investing for the long term, if you guys are taking into account what stocks you think will do well over the course of many years and not necessarily just little pumps that you want to get in on, then this news shouldn't bother you that much. It shouldn't be the worst thing to see that some stocks are going to be moving down, because it just makes the long-term buys even more attractive if they're a little bit cheaper. And, we've got a quote today from Winston Churchill where he says, "Success is not final, failure is not fatal. It is the courage to continue that counts." And that applies not just in your everyday lives, but in investing as well. Despite what you guys might see in the markets, if the markets are dropping temporarily, that's not going to be final. It's not going to be fatal for you, most likely, as long as you're not playing some risky options. But if you just continue and have the courage to continue through some red days, you're overall most likely to succeed, right? If you end up continuing, then that's really what's going to end up counting in the long run over the course of decades. When you look back at your investing career, you're going to be very happy, most likely, that you continued investing instead of getting discouraged and quitting the market just because you saw some red days or some red months or even a red year or two. You'll probably be happy that you just continued investing, buying the dip, and over the long run, making investments based on fundamentals that you really like and stocks that you think have a very bright future. So that's what we've got for today's video, guys. If you appreciate it, feel free to subscribe to the channel. Keep in mind, none of this is financial advice. And other than that, I'll see you guys in the next one. Hope you have a great rest of your day. Bye.